Have you ever wondered if FGD can protect you in a market crash? Well, let's embark on an enlightening journey together to explore this intriguing concept. First things first, what exactly is FGD? Simply put, FGD, or First Trust Dow Jones Global Select Dividend Index Fund, is an exchange-traded fund that aims to replicate as closely as possible the price and yield performance of the Dow Jones Global Select Dividend Index. This index is composed of 100 of the highest dividend-yielding securities in the Dow Jones World Index. So, in essence, when you invest in FGD, you're buying into a vast array of top-performing dividend stocks from across the globe. Now let's rewind the clock a bit and take a look at FGD's track record. Over the past decade, FGD has exhibited a robust performance, consistently delivering attractive returns to its investors. This is largely due to its unique focus on dividend-paying stocks, which tend to be more stable and resilient in the face of market volatility. But that's not all. FGD also plays a crucial role in portfolio diversification. By spreading investments across various sectors and geographical regions, FGD helps to mitigate risks and enhance potential returns. Plus, its focus on high dividend-yielding stocks provides a steady stream of income, which can be particularly beneficial during market downturns. However, it's worth noting that, like any investment, FGD is not immune to market fluctuations. There may be times when it underperforms or even incurs losses, but thanks to its diversified nature and focus on stable dividend-paying stocks, FGD has the potential to weather market storms and bounce back stronger. So now that we have a grasp on what FGD is, let's delve deeper into its potential during a market crash. Stay tuned as we unravel the intriguing dynamics of FGD in turbulent market conditions. Remember to comment below on your experiences with FGD and subscribe for more insightful content. Now, how exactly can FGD protect you during a market crash? As an investor, you've likely heard the phrase, "Don't put all your eggs in one basket." This adage rings true when discussing the role of First Trust Dow Jones Global Select Dividend Index Fund, or FGD, during a market crash. FGD is essentially a type of mutual fund that focuses on dividend-paying stocks from around the globe. It's a way of spreading your eggs, so to speak, across multiple baskets. But how does this mitigate losses during a market crash? Let's dive in. The primary advantage of FGD is that it represents a broad array of sectors and industries. So even if one sector is hit hard by a downturn, other sectors within the FGD might remain stable or even thrive. This diversification can help safeguard your investment from the full brunt of a crash. Additionally, the companies within the FGD are typically mature and financially stable. They're usually less volatile than growth-oriented stocks, offering a level of protection in volatile times. Their commitment to paying dividends can also provide a steady income stream, which can be particularly valuable when market prices are falling. But it's not just about protection. FGD can also offer a safety net in the form of reinvestment opportunities. In a market crash, stock prices fall, yes, but this also means that new investment opportunities arise. The income from your FGD dividends can be reinvested into these lower-priced stocks, potentially setting the stage for significant gains when the market recovers. While FGD can't completely shield you from losses during a market crash, it does provide a level of diversification and income stability that can help cushion the blow. And remember, investing is a long-term game. Market crashes are a part of the journey, but with strategies like investing in FGD, you can navigate these turbulent times with a bit more confidence. As we can see, FGD has a unique role in times of market turmoil, but how does it compare to other investment options? Don't forget to share your opinions in the comments section and hit the subscribe button. Now let's compare FGD to other popular investment options. When it comes to investing, variety is the spice of life, and there's no shortage of options. Stocks, bonds, mutual funds, real estate, and the list goes on. But what makes FGD stand out from the crowd? Let's start with stocks. They offer potential for high returns, but they come with a significant level of risk. In a volatile market, you could lose a substantial portion of your investment. FGD, on the other hand, is designed to provide a more stable return. While it may not offer the sky-high returns of individual stocks, it provides a safety net in a market downturn. Next up, bonds. They're known for their stability and regular income, but they're not immune to market fluctuations. If interest rates rise, the value of your bonds could fall. FGD, however, is not directly impacted by interest rates, providing an additional layer of protection for your investment. Consider mutual funds, a favorite among investors for their diversification benefits, but they're not without their drawbacks. High fees can eat into your returns, and you're relying on the fund manager to make the right decisions. With FGD, you have more control over your investment and lower fees. Real estate is another popular investment choice. It's tangible, it can provide a steady income, and it often appreciates in value over time. But it also requires significant upfront capital, ongoing maintenance costs, and it's not very liquid. FGD, in contrast, requires less capital to get started, has no maintenance costs, and can be bought or sold at any time during market hours. So while each investment option has its pros and cons, FGD offers a unique blend of stability, control, and flexibility. It provides a buffer in volatile markets, lower fees, and the ability to access your funds whenever you need them. Indeed, FGD has its unique advantages. But how should one go about investing in it? Remember to leave your insights below, subscribe, and stay on board as we discuss how to invest in FGD. So you've decided to take the plunge and invest in the First Trust Dow Jones Global Select Dividend Index Fund, or FGD for short. But how do you go about it? Well, let's dive right in. Firstly, timing is key. While the adage, time in the market beats timing the market holds true, it's also essential to consider market conditions. Do your research, understand the global economy, and keep an eye on dividend trends. If dividends are on the rise, it might be a good time to invest in FGD. Next, consider how much you want to invest. It's always a good idea to start small, especially if you're new to this. Don't put all your eggs in one basket. Diversify your investments to mitigate risks. Remember, the FGD should only be part of your portfolio, not the entire thing. Before investing, you should also consider your financial goals. Are you investing for long-term growth or short-term gains? FGD can be a good option for long-term growth, thanks to its focus on dividends from companies around the globe. Risk tolerance is another factor. Investing in an ETF like FGD comes with its own set of risks. The fund's performance is tied to the success of international companies and global economic conditions. If you're comfortable with this level of risk, FGD might be a good fit for you. Lastly, consider seeking advice from a financial advisor. They can provide personalized guidance based on your financial situation and goals, and they can help you navigate the complexities of investing in ETFs like FGD. In conclusion, investing in FGD involves careful planning and understanding. You need to consider your financial goals, risk tolerance, and the amount you're willing to invest. You also need to keep an eye on market conditions and global economic trends. Investing in FGD may seem daunting, but with careful planning and understanding, it can be a beneficial addition to your portfolio. Before we wrap up, don't forget to comment, subscribe, and watch to the end to avoid making mistakes in your ETF decisions. Now let's recap what we've learned about FGD. First up, we took a deep dive into the world of FGD, or First Trust Dow Jones Global Select Dividend Index Fund, for those of you who appreciate the full title. We explored how this exchange-traded fund operates, its structure, and how it aims to replicate the price and yield performance of the Dow Jones Global Select Dividend Index. Next, we navigated the stormy seas of a market crash and looked at how FGD can serve as a lifeboat amidst the turmoil. The key takeaway here is that FGD, with its focus on companies that consistently pay dividends, can offer a degree of stability and potential income even when the market is in a slump. We then put FGD in the ring with other investment options, weighing up the pros and cons of each. Remember, when it comes to investing, there's no one-size-fits-all solution. Instead, the right choice depends on your individual financial goals, risk tolerance, and investment horizon. In the fourth scene, we discussed the practicalities of investing in FGD. We underlined the importance of doing your homework, understanding the fund's investment strategy, and keeping an eye on the market conditions. So, after all this, where do we stand? Well, if you're looking for an investment that can potentially offer stability and income in a market crash, FGD is certainly worth considering. It's not a magic bullet, and as with any investment, there are risks involved. But with its focus on dividend-paying companies, it offers an intriguing and potentially rewarding option for weathering market downturns. So, there you have it. FGD, a potential shield in a market crash. Remember, the key to successful investing is understanding your options, and hopefully this video has helped you understand FGD a little better.